Hey folks, welcome to Thursday, the 7th of October 2021. And something we've been talking about this morning is winter is coming, and the utility bills, as Reed was saying, are coming. Um, so with that, I'm talking about that because yesterday we saw Vladimir Putin, president of Russia, talking about how he wants to come to the aid of Europe in trying to get a handle on these rising utility bills and gas and electricity bills. And so we've seen that gas coming up, currently down 4% on the day, was down about 4.5%. A little bit of unwinding there, but from my point of view, I don't think we are out of the woods of higher gas prices, and I think we will be seeing that higher gas prices over the coming month, and as we step in towards winter. Just amazing pullback, as you can see, we were looking at on the S2 on oil there is right now. So, but just kind of covering over some of the main themes that I think are going to be driving the markets. We're hearing a lot about the debt. The debt ceiling, and and are we going to go over the cliff in the US? I think too much is being attributed to that. Too many moves have been attributed to that in equities. I think we've had, generally yesterday, what seems to be a bottoming out on the downtrend that we've seen for the last 3 or 4 weeks. Well, probably, yeah, 3 or 4 weeks. So I think largely a lot of technical stuff going on in these markets, but of course, media is always looking for the next story to pin a move on. Um, so yeah, I mean, let's see what else. Yeah, I think look, we've had a nice bounce on equities. It seems to be holding on to the sort of mid pricing of the week so far. We're back to the 50 EMA and SPOOs. Let's go over and have a look at these charts really, and see what we can see. You see the DAX coming out of the lows here. 14,799's trading on the lows yesterday at 10 a.m. We've been looking at this level for quite a bit actually on DAX. And here you go, coming in, absolute beauty there. The low of the 4th of May this year coming into play just below the 200. Big excess on the lows yesterday, and now we're trading up, well, pretty much probably about a whole percentage point up out of that. The reopen on trade. Let's see, chart calculator on. So we're trading actually 2.23% up from that low yesterday, seen in the DAX. But we're here to look at these US markets, and the NASDAQ now coming out of the lows to really show us, a couple of things. But there's quite a complex picture, right? Because essentially the bonds did drop off kind of 2 days ago to recover yesterday, and gold, was on the lows, and then as we recovered essentially in Tinos, you see that gold did actually take the bounce with this and escaping the inverse correlation gold has with the real yield there. Obviously, if we do drop lower in bonds, then the real yield and the yields are going to be rising. Therefore, if the yield is rising, people are not going to be plowing into gold as much. Okay, so I think we've tried to make a bit of a pullback on what has been a break 2 days ago. I think we can trade lower on these bonds. S2 I will be looking out for, and that's the reason why I'm not such a fan of trading gold. We can have a look at gold now in a minute, and you'll see what I'm talking about. But for the Nasdaq, really, this is what we were looking at yesterday. Two reasons, showing the support on the trend here, and we got it again. I mean, I took the high here from the 24th of June as a sort of an area that we could look at in confluence with where the market was trading in and around this mega uptrend, right? The mega uptrend. Do have a look at my other pre-US videos, the low of the 2nd of February 2020 to the low of the 5th of March 2021, and that gives you your trend up. So, we're now working our way back pretty much to the 200 EMA already. We're up about 1% on the session for the day. I think it's going to be hard getting the last mile of longs in this market. We are supported 14,876 and a quarter, which is a sort of high here from the 7th of July. And yeah, we worked into it, then took a pullback. Now we're pushed above. For me, I'd be interested in taking a long on the Nasdaq on the 100 EMA 14703 evens, just above pivot there for the day. But otherwise, I think, well, look at the trend. What have we had since every time we test on this trend here? I mean, this market doesn't go down really. No one ever, ever, ever made money by holding long-term shorts in the Nasdaq unhedged. That's just a fact of life. There are very few facts of life within these markets, but that is certainly one of them. So beautiful trade there yesterday. Looking at the longs on the 14414s up to where we trade now. That's 3.38%. If you were buying in around this area yesterday, I mean the payout in around that long, just to kind of show you the risk reward on that. Like, okay, stopping out below the trend, catching it on the low, or maybe even the candle after, up to where we are now. That's a 5.4 to 1. That's about $18,000 per $18,500 per single contract traded. So, this is what we look at in the room. We're trying to trade these levels. Yesterday, I mean, look, I don't want to make this seem like it's easy peasy, but the opening on the Nasdaq yesterday was very, very, very tricky. This whole candle here was extremely tricky trading. It basically wiped the entire range within probably 40 minutes, and then kind of pushed to the highs on the 100, took a pullback, and then went back on up in the overnight. In the rest of that session. So this was by no means an easy trade, and especially if you're coming in late on that trade. I mean, you just cannot. If your inflection area is here, or even on the trade, the trend, the prior day, if you're using the 14414s as that sort of risking off level, maybe you could stop out below that. But I mean, as soon as this thing starts getting up into, the midday, the 1 o'clock marker, on the open there, the best price you would have gotten on the open there was the pullback to about 14,480s, 483s. But you cannot then be kind of looking to get in with tight risk, somewhere up here, because essentially you're way off base, as they say. Your stop should be here. And if you're looking for entries here, that's great. But look at what happens to the risk reward picture now as I increase the entry price to anywhere like up here. Well, this market could easily at this point make a pullback and test on the 14414s, or even the trend again, in which case you're adopting 472 ticks of risk on this market. And that, my friends, is just, as I say, dumas, too much, too much. So, really, you got to be confident and with your contextual read on the market. And yeah, sure, it didn't trade to the tick here. Um, but I mean, if you're operating, in the markets in the morning time, you would be able to get on this trade pretty easily. So I think it's gone. I think the long is gone. The best entry for the long is gone right now, and that's why I'm looking on the pullback for support around the 100 EMA. You probably get some flushing, then close the candle above, look for the long at that point, and up we go. But certainly for me now, there is a Yorkshire country mile of upside in these markets. It's all just about timing where you get involved, where and when you get involved to avail of further upside in this market. SPOOS is doing fantastic, is well out of the lows that we've seen. Consolidation on the lows below and above the 100 EMA. Really, it was tricky trading. The 100 EMA was resistant, then pushed above around 6:30 late in the session. Again, as I said on the Nasdaq, both the Nasdaq and the SPOOs were really tricky yesterday. This whole opening range was absolutely massive. And I think your best strategy to deploy there, when you should have multiple strategies in your quiver, the simple the better, is to essentially look at the opening range, seeing that it's been massive, and then just say, right, well, I'm buying a breakout on the opening range then. Here was not very easy, but I think if we kind of come back to a smaller amount of days, like look at 10 days here, and then go back to like a 15-minute chart, you'll be able to see that just that opening range on the market was just wholly contained for quite a while, and then finally the pop above, a little bit of excess on the lows here, and then get on up on the 43.21s as support just above the 100 EMA. So I use 60-minute bars really because we're just looking at overall bigger contextual analysis in these markets throughout the day. I think you get too many signals on the 15-minute, but then when you are primed looking for that trade, I think yeah, it's fine. Go down to a 15-minute, go to volume bars. Wouldn't go to anything small. Certainly 2,000 volume bars would actually be quite a small amount for the SPOOs, and that's something we certainly always look at in the elite team. So yeah, look, we're bid up. We're cruising towards the 50 EMA again here. I'd actually like a pullback to this little range low, 43.59.5, see what we can do. It was great resistance 2 days ago. Should now be pretty decent support. And if it's not, you don't need to be there trying to support price. Let it drop down. Find support here in the opening range of yesterday, and then look for your longs for further upside continuation. Looking over at the Dow. Let's have a look at the Dow on the daily here. There you go. Back to the 50 this morning already. It's really quieting down quite a bit. Look, it's elevated. I think we're going to be finishing today at 34,775s, which is this level above the high of the 10th of May this year. Similar to the SPOOs, get a little pullback on the 100, 34,200s. This has been a huge level, the 34,200s for me. It's actually not one of my bigger levels, so I need to change the coloration of that and just make it a bit bigger. So there you go, 34,200s. It's not been hugely clean. It's really an area. So actually, I'll just delete that line and then let's make the area. So we have the excesses on the low as it was supportive, and then we have the excesses on the high as it was resistant. So that really gives us a nice old range here of what's going on. So with that, I think if you pull down in here, excess into the 34,126, then I'd be looking for the longs to get on up here and above to that 34,775s. We may not see that depth of a pullback, to be honest. I mean, we're up 0.4%. That would be probably bringing us negative, I'd say 0.1% on the session at that time. So it might just be a clean pullback to the 100 before then getting on up. But I'm definitely looking at the upside in these markets, and nothing else at the moment, to be honest. I am looking at a couple of different markets. So there's my system just telling me about a couple of markets. I'll just mute that. So yeah, you see oil. Yeah, I mean, look, oil was a really tricky day yesterday for the kind of perma bulls in oil, right? We had a decent pullback. That BP down like 2%, PAA down similar, maybe 1%. It's just really annihilation for the kind of the bulls on their books and their portfolios yesterday. But you've seen this little wedge that we had a breakout on, right? See this? We've been tracking this, right? This little wedge pattern that we had a breakout on Monday, 1 o'clock. Up we go into those highs on the year. 79.80s traded. Yesterday, there's quite a few of the team kind of going, what in the hell is going on? Like as oil just crushed all the way down through a whole lot of value yesterday. But we've seen, the S2, we were looking at this just prior to coming on here. I was actually looking at the S2 and the 75 handle there for support on this sort of trend that we had. And not, a nice little trade to be done. Looking at the risk reward on that one, you have tight risk on that, taking it off at the 75 spot 74s, which is a big level. And you're getting 4-1 on that. 4-1, 73 ticks of action. Loving it. So 18 ticks of risk, really nice. So you could easily put that trade in. You're done for the day. Depending on how you size into it and what you're looking for out of your day. But really, going back to the weekly chart above, you can see that huge sort of what it was an inverted hammer. Now it's becoming a bit of a doji, right? So Look, I think this market is finding support 75, 74s, excess on the lows of the S2. I think now that we've had that nice sell down on the day so far, I think we can actually try and get back up to 76 spot 70 or spot 67s. Let's have a look at gold now before we go. So if I kind of show you gold like this, and then T notes essentially like this, and we have a synced, I should have a synced, should have a synced charts here. It's not synced, unfortunately. Let's just oh yeah, let's turn that one off and turn this one on, and now you can see the chart is synced, right? And so I'm just going to normalize the XY on the T notes, and you can see here now the bid on gold, bid in T notes, right? And actually, this is precursor by a bid in the bunds rather than T notes, right? But you see the sell down again here in gold, sell down in T notes, the bid up in gold. So really the fate of these two is tied together. It's not so much, sometimes in traditional risk off moves, you might see one or other, mainly gold, go first. Um, Ahead of Tino's. But now it's a kind of different world, and the yield here, if we do crush even further on Tino's, which I think will lead the way, you're going to see that yield be more attractive on gold, than eventually being the kind of lead lag relationship and gold lagging, and then you get the short breakdown on gold. So you got to be a little bit smarter with your gold trading these days, and it just requires a lot of really monitoring the bonds in order to kind of get on that clean, confident trade for gold. So really, I think we will make lower lows on T notes for the week. And I think the bounce really back up to trend here, which sits at R1 today, 1774s. I think, yeah, I think we'll see some selling come in off of that. We should move down then in unison with the bonds. So yeah, as always, clear as day uh, on what we're expecting to happen. Nat gas. I'll just look at this on the 60 minute. You can kind of see here we've kind of taken a good old, or sorry, this is Dixie. Let me just get the Dixie out of the way and get the nat gas on here. Yeah, you can see that yesterday we had a lovely trade here. It came down to this area on the trend, the low of the overnight change on Wednesday, and the low about 9 p.m. Friday of last week. And so really, that trend was supported. This bounce, while it might not look like anything, right? While this doesn't look like much, if I get my calculator on, this is actually a 2% bounce, which is a big one, right? It's quite a lot. It was about let me just see, the price difference is about 118 points, right? 118 points on our ticks on that gas there on the push back, and then really 5 p.m. smashed down below, came back to test on the trend, indication to get short, and it's been a pretty much 2.8%. Actually, it's been as far as 4.5% down in this session already. Testing the 527s as resistance now. I would be looking at a short there for further continuation on the downside. Of course, the market coming off because good old Vlad in Russia has said he will stand by his customers essentially for nat gas. But with that, really, where is the action? What's he doing about that? And Nord Stream 2 still not online, stuck in red tape. So I think there's a lot of pressure growing now to push this Nord Stream 2 and get it online, get the gas moving, get that photo up with the European diplomats turning the handle and opening up the spigots. All right, so that's it for me for today's pre-US session. Please do, if you're watching on YouTube, please do click the subscribe and catch up with these videos, albeit they are released the day after. But I think it's a good way to kind of get in tune with the markets and how they're moving. And for the pro traders in the Discord, I will speak to you at 1 o'clock. All right. Have a good session.